Well, about all I can say is wow. Buyer demand keeps holding on in Portland Metro real estate despite mortgage rates in the high sixes. Let's take a look at the very latest stats and trends for our real estate market. Thanks for joining me today. It is a confusing real estate market, both nationally and right here in Portland. If you are tuning in for the first time, I would love a like and maybe even a subscribe, which would make sure that you see more content like this in your feed. Now on with the show. Sale prices kind of shot up this week with a gain of about 4% over the previous week, but more importantly, a gain of almost 7% over last year at this time. If you have been keeping up with these reports, you know that we've been seeing some pretty modest gains over the previous couple of weeks. So when we compare the first half of November of 2024 to 2023, looking at a larger sample of numbers, the sale prices average out to just a 3.2% gain over last year, and that's more in line with what we've been seeing these last couple of months. The supply of homes for buyers to purchase keeps moving down. The number of homes that hit the market this past week continues to fall short of what we were seeing last year at this time. Currently, buyers have about 16% more homes to choose from compared to last year. That feels kind of high considering that last year wasn't a great year for real estate, but that 16% gain is down from about a high of 33%, which we saw earlier this year, and the delta between last year and this year continues to shrink. Now on to the demand side of the supply and demand equation. For the second week in a row, we've seen about 16% more purchase contracts agreed to by buyers and sellers compared to last year at this time. In fact, buyer activity has been outpacing last year's activity by a significant amount for about the last 2 months now, and that's in the face of some of the highest mortgage rates we've seen so far this year, and at a time when real estate activity should be tapering off. As I mentioned, mortgage rates haven't been great over the past few weeks. We're dealing with some of the highest rates we've seen so far this year. The best rate that I could find for the 30-year fixed on Thursday was about 6.75%. That's the best case scenario. And I haven't seen any immediate signs that rates will start to move down, even though most analysts feel that we'll start to see easing in mortgage rates towards the end of this year and through the middle of 2025. One of the benchmark mortgage rates that I'm always looking for is that 6% mark. Over the last couple of years, every time we've seen mortgage rates dip below that 6% mark for the 30-year fixed, it injects a lot of activity into our market. One place that we have not been seeing much easing is in the number of price cuts. Those numbers are still running pretty hot, and they have been for a couple of months now. In fact, we saw about a 40% increase in the number of sellers who dropped their asking price compared to last year at this time. What's the result of that? On average, sellers had to discount about 4.5% off their original asking price in order to secure the successful sale of their property. So sellers are cutting prices, but they don't appear to be slashing prices overall. So what's coming down the line for us? Well, Thanksgiving is coming down the line, and I expect to see next week to be quieter and then pick up the week after. Talking about mortgage rates, the markets still have a fairly strong confidence that there will be another quarter-point rate cut at the Fed's December meeting, but that's not until the 17th or 18th of next month. So a lot could happen between now and then. Looking forward to next week, I will be doing one of those, another one of those surveys where I look at the hottest and the slowest markets in the metro area, which is always kind of interesting. So in the meantime, have a great Thanksgiving, and I will see you next Friday.